Today is my day. This is John Smith, introduced to our show today is John Smith. We're going to do some looking at charts, things, and some of the economics that are involved in making stock charts go up, go down, go all around. And that certainly has been a lot of that. If you look back here just 6 months or so, everybody in the world was thinking it's going to be now, it's going to be now, it's going to be now, where the stocks all drop. And there are certainly economic problems that can deviate with that. And that could be very, very well. I've got some articles today that are done by very let me get my tongue untied. The route. Everyone's will August stock market turn into a route? That's the one that I'm looking for. And one guy, he's top notch. His name is Tom Lee, and he works for Fundstrat. And I've followed Tom Lee almost every chance I get it, and listening to what he has to say. And I can see that I can disagree with him a lot of times, but let me tell you, he's been right every time. Every time. Every stock picker, ever whatever, they look after what Tom Lee says. So if you're able to get in on that Tom Lee information, it's basic stuff. Basic stuff. So I'll give you a little. Here we go. See, an August pullback in 2023 U.S. stock market rally hasn't exactly come as a big surprise. But the 5% slide for the S&P 500 SPX over 15 trading sessions through Thursday is about as bad as August typically gets. Noted Fundstrat's Tom Lee in a Friday morning note. Still, Lee, one of Wall Street's biggest bulls, and he is the biggest bull and has been the big bull because he's made money for all those people that followed him on the biggest bull. But now they're making a turnaround. Maintains that the retreat will likely prove to be its August phenomenon. That's one of the phenomena. It's August. August tends to be a rocky month with volatility. VIX often hitting its peak for the year. Can also throw in often volume trading conditions, particularly in the latter half of the month, as vacation season see its end of summer last hurrah. We see selling stocks off for now, and logical reasons, he said. Those reasons include the 50 basis point rise in the 10-day Treasury yield, pushing the rate to a 15-year high this week, a rising U.S. dollar, and a long-awaited jump in the CBOE volatility index. These are all indicators that people look at every day, all day. Now, earlier, a stumbling stock market faced a crucial summer test. Here's what will decide the bull's fate. The S&P 500 index, NASDAQ composite, on Friday scored a third straight weekly loss, while the Dow Jones Industrial average suffered, I should say, 2.2% weekly. So they would take the slide into a serious rout, which Lee defined as a 10% pullback to the 4150 level for the 40 SP 500. Rise in yields would need to threaten to break something, or there would need to be an additional exogenous shock, Lee said. I'm not saying that cannot happen. For instance, if oil surges another 10% and signs of wage pressures rise, then this could turn into a large sell-off. Why? Because it would make investors question whether inflation is on a glide path lower, Lee wrote. Why Treasury yields keep rising, causing pain for stock market investors. For now, the inflation story is to make a take-back seat, Lee said. Investors focusing on rising bonds yields, which on price to earnings ratios and signs of the strengthening U.S. economy, which says the risk of more Federal Reserve interest rate increases. China's weak economic data and property woes are also a concern, at least at the margin, for U.S. investors, he said. Need to know. Bond yields hold the key to emotional market that can change on a dime, says this strategist. But Lee argued that the market is offered signs that stability may soon return. For one, while the speed of surge in the 10-year yield is hurting stocks, such jumps often occur near the end of a selling cycles for equities. He noted that the 50 basis point of half a percentage point jump in the 10% 10-year yield seen over 21 days echoes yield jumps that ended on 23rd of September in March 2nd of last year. In those instances, stocks bottom 8 to 16 days later. Second, stocks are only and technically oversold at this time. The gauge down on the McLennan oscillator, dropping to a minus half, 50%. That's happened just 39 times in 1990, and 51 times, or 51% of the time, stocks bottomed with 5 days, and 72% of the time bottomed with 15 days, Lee said. Interesting. With that time frame, he might Lee offered a couple of dates that could have prove more important for the market's next move, including August 24th, the morning after chipmaker NVIDIA. NVIDIA reports its second quarter results. NVIDIA blew out results this spring, were credited with sparking on frenzy, AI, I should say, frenzy. They saw a mega cap tech stock surge ahead. Investors will also be paying attention on Friday, August 25th, when Federal Reserve Chair Jerome Powell is scheduled to address the Kansas City's Fed's annual symposium in Jackson Hole, Wyoming. Every year, there's a Jackson Hole, Wyoming, for the economics people and the Fed people, that kind of thing. Last year, Powell's Jackson Hole speech marked the top of a bounce for the S&P 500, with stocks then falling 19% over the next 8 weeks. Steve Lee recalled, could stocks rally 20% more this year at Jackson's Hole? He says, I don't think so, but anything can happen, he said. And he wrote, most Federal Reserve officials last month continued to see serious inflation risks, which could more interest rate hikes, according to the minutes of the July policy meeting. And I'm going to say they'll probably not do anything until after the Wyoming trip, and that's where the Fed goes this time of the year. Fed officials will meet again on September 19, 1920. Here it is. Has said this is a live meeting, meaning the Fed will either hike rates again or decide to skip taking any action. Traders and derivative marketers, those are options, only seek about 10% chance of a rate hike in September. Fed officials have penciled in more than rate hike this year. There are 3 more interest rate policy meetings left, right, left. Hey, I was a drill sergeant in the Army. I can do that. Next item. What is recession? We've been talking about that for, coming on full year. The labor market is sizzling in these states, state by state. The unemployment rate fell in 7 states in July. What's the job situation where you live? This is all known that some of the states are doing well. California's doing well. Florida is blowing the top off, more than even Texas. I'm going to jump over to mortgage rates because the housing sale of inventory is not going to sell unless these people can mortgage rates, can get a rate. And in the past, I would think we were down somewhere 5%, 6%, and then all of a sudden, boom, we jumped 7%. Just read an article in the local paper about how the rates now are going to be exceeding 7% now, and then maybe even 8%. Well, it only took 4 more days to increase the interest rate on a single family home, 30-year. Market Watch tells us that we're over 8%. Mortgage interest rate reached 8%. There would be serious consequences for the housing market because nobody wants to buy a house because they won't have to pay a mortgage to purchase that. What it is, just what it is. I wish it wasn't, but it's not. But, we didn't do so bad here in Arizona. We rented for a year when we came here. And then some of the prices here were beginning to drop. And we've been looking at it, and we did see that. So that was our key to drop because that was going to be better in the future. Maybe we'll sell this and buy something else. Who knows? Of course, my wife does. She tells me all that stuff. Become Homeownership has become much more expensive, but will the rates go even higher? My guess is going to be 8.5%, 9%. I can tell you back in 1982, I bought a house, and I could only get a mortgage at 8.5%, and I took it, and that was okay too. We ended up having a good, because everybody else was unequal for them, and all was it scared. It was the Now we look at buyer traffic and reporting the buyer traffic, whether or not the rate is going to be a benchmark interest rate again, once again. We sold that house and did a little better than broke even. What happens to housing if rates surge and the 30-year mortgage interest rate reached 8%? There would be serious consequences for the housing market. At 8%, the housing market, I'll rephrase, with fewer buyers and far fewer sellers, he added. But don't expect high rates to hurt some prices just yet. As long as the job market doesn't turn negative, then home prices will be stable. Through home sales takes another step downstairs. If there is a job cutting recession, then home prices will fall as some will be forced to sell while there are fewer buyers. That's a fact, Jack, and not true. It's going to be worse, possibly. He noted that the monthly mortgage payment for a median priced home in the prevailing 30-year mortgage rate has risen from close to $1,100 per month in January to over $2,100 today. That's a whole $1,000 a month. At 8%, the monthly payment would rise to over $2,300, excluding any larger number of potential buyers will above average incomes. That's not good. That's not good. It's not going to be. That's one of those. If you can see people selling their house, then you got to worry about it. Maybe they paid cash for it in the first place and don't have to send up, they might finance it themselves if they did that, which is an alternative. You do a seller finance to a buyer, do a seller finance. Something popped up here this past week was the treasury yields keep rising, causing pain for stock market investors. 10-year treasury yields ends at its highest close since November 7th, 2007. Let's see now. Anybody got a calculator? I got 2023 here, which is strange. Federal Reserve Chairman Jerome Powell speaks during a news conference last week or so, a couple of weeks now. Minutes of the Fed's meeting last week are the latest catalyst. I can say that people now need to learn what the items are. Interest rates, they do change in terms of interest rates. It's called a jumbo rate. You want to buy a bigger house and pay more for it, then you're going to get charged more interest for it. That's always been the case. All the other peoples and houses are going to be, in a way, somewhat frantic, and they can pour for that frantic because it's coming to it. And if you look in the inventory by the realtor.com, that's a website. If you stay tight with that and just to follow a house, even if you're going to dream that someday, just put it in there and see what you want, what you get, and then what other people are paying and what they get. That's the way you can size up the sale of real estate, single family homes. That's realtor.com. That'll be the best for you to have a good lake. Not a lake. You're lucky if you get one by the lake. Probably not. Those aren't being sold. They just stay there. I know that there are many times that you can view into the future to an extent by using statistics in terms of interest rates, down payments, sales of the prior home in terms of trying to sell it. There's a lot of factors go in, but they're not hard. You can think about those, and it will give you a lot of solace. I think it will is the word. You don't need to be crazy about it. Just be patient about it. That's about single family homes. I can't use those same adjectives about the stock markets now because it looks like there's going to be a downturn. And Tom Lee said that might be 10%. And everybody else around him tell him, no, it's going to be 10. It's going to be 10, Tom. It's an interesting world. Don't buy any new cars. Don't save the money for others. And maybe buy, one monthly payment, another monthly payment. That's how people look at it, the mortgage finance people. And I'm sure that they'll do it the same here now. None I've had today in terms of all this cheery. I just can't say it anymore. It's not just good. Just get in there and just be safe. It's not going to be a hurricane. Although I just looked on the map in the news, we've got a hurricane coming down the coast of California. How many times has that happened? Not in my lifetime, not one time. All the other comes on the Pacific, the Atlantic, but I've never seen one come out of the Pacific. So it's how crazy the world is now. And I wish you a good view of yourself and your opportunities and your family. And you'll all have bunker down, and when it comes out, you'll bunker up. So thanks very much today to view this. It is interesting, and it is affecting you, or will affect you, if not already. I'm glad that my integrity, people like that, I like it too, and that can help you get a mortgage. And I'd like to say goodbye to my audience and thanking you for learning something here. And then for me to let you go and say, happy trails to you.